to the second Security Bank Economic Forum 2020. I am Mimi Young, business correspondent of the ABS-CBN News Channel, and I will be your host for today. As the COVID-19 pandemic continues to grip the world, we are turning to science to look for solutions. From drug companies that have launched an all-out drive to find a cure, to hospital workers and public health experts on the front lines of this fierce battle. 8 months in for the Philippines, and the financial and human costs of the pandemic continue to mount. 59.7 million cases globally, the Philippines right now in the 27th spot with over 421,000 cases, more than 20,000 cases of which are active, with over 8,100 deaths so far. This morning, we're going to go beyond the headline numbers to share stories from the pit. What's the reality on the ground for frontliners? How does the future of the Philippine healthcare industry look like? What policy support can we count on from the government? And how can you position for 2021? We've got an exciting conversation lined up for you, but first, to officially welcome us to the event, I'd like to call on the President and CEO of Security Bank, Mr. Sanjeev Vora.
Good morning, everyone. It is my honor to welcome you to Security Bank's Second Economic Forum for 2020. First and foremost, I would like to acknowledge the distinguished speakers joining us today. Ms. Leong Suk May, ASEAN Head of Global Markets Research, Global Markets Division for Asia at MUFG Bank, Security Bank's strategic partner. Honorable Stella Kimbo, representative of the 2nd District of Marikina City, and our very own Security Bank's Executive Vice President and Treasurer, Raul Martin Pedro. To our clients, business partners, and friends from the media, we appreciate you taking time off to be part of our online economic forum. Every year, it is your active participation, virtual or not, that makes our economic forum even more meaningful. You may recollect in August this year, we held our first virtual economic forum. Our keynote speaker then, Department of Finance Secretary Carlos G. Dominguez, discussed the economic outlook, impact of COVID-19, and the post-COVID recovery plan of the Philippine government. He reiterated the need to find the balance between safety and the economy to ensure the country's continued growth. As our own chairman, Abet Villarosa, said back then, we are certainly facing something we have not faced before, at least not in our lifetime. This economic forum is our attempt to help our clients and business partners navigate these rough seas amidst this pandemic typhoon. Bringing people together like this is important to us. Sharing our knowledge and networks with one another is key towards ensuring the country's success during these challenging times. We are going full throttle with building and strengthening partnerships with key stakeholders across different industries. The pandemic has brought to light once again the importance of the healthcare industry and the medical community. Clearly, conversations centered on healthcare will be and should be part of our future as you continue to be at the forefront of this global battle. As part of our Better Banking promise, we are bringing our economic forum to you, our clients and partners from the healthcare sector. The theme this morning, which looks into the economy and how the healthcare industry is faring amidst the adversity faced due to the COVID-19 pandemic, will provide compelling insights on the present and future of the healthcare industry. We hope that Security Bank's forum today will equip leaders and key players like yourself with actionable insights to help you realign your business strategies to the economic realities brought about by this pandemic. Aside from staging exclusive information sessions, we have also been redoubling our efforts to provide better banking solutions. Allow me to share with you some of our initiatives in the past couple of months geared towards empowering clients, including those from the healthcare sector. Retail and business clients can open an account from the safety of their homes through our online account opening via Skype. Customers can continue to transfer funds to other participating banks and e-money issuers for free until the end of the year through InstaPay on our mobile app. Our e-Give Cash features make sending and receiving cash easier even to those without bank accounts. In order to keep up with the increasing demands for online banking, we are implementing a series of upgrades and enhancements on our digital banking platforms to improve your overall banking experience. On top of providing an enhanced banking experience, we also launched our Get Better campaign to support medical institutions and frontliners, our local businesses, students, and families. In support of the Philippine Red Cross, we helped establish a molecular lab for COVID-19 testing and donated 3 negative pressure ambulances. As the bank partner of St. Luke's Medical Center's convalescent plasma treatment, we help fund the treatment of indigent COVID patients. We partnered with institutions such as Singapore's 88 Tuition and Education.ph to make e-learning more accessible to Filipinos. We've also partnered with Sprout Philippines to offer free HR and payroll solutions to help companies of all sizes manage their businesses at this critical time. Recently, we've donated our Mid-Autumn Festival gift fund for the benefit of the medical community and indigent students. As always, we would like to thank you all for your continued trust. Our customers have always been the key driver and inspiration for our efforts and accomplishments. This is precisely why we are motivated to be your partner in success. We are certain that we will come out of this current crisis stronger and better equipped to help the country get back on its feet. Security Bank is with you in striving to overcome this pandemic and adapting to the new normal. We are hopeful that it will get better. Together, we can get better. On behalf of Security Bank, again, welcome to our Economic Forum. I hope that you will find the exchange of the ideas this morning insightful. Maraming salamat.
Maraming salamat din. Thank you very much, Mr. Vora, for that very warm welcome. Our next speaker is Security Bank's Executive Vice President and Treasurer, Mr. Martin Pedro, Raul Martin Pedro. Now, prior to joining the bank in November of 2005, he was first Vice President of Equitable PCI's Treasury Department, serving as head of foreign fixed income trading and derivatives. He also worked as a forward FX trader for Deutsche Bank AG Manila. Mr. Pedro is also the chairman of SB Forex Inc. since May 2016, in fact, and the bank's representative to the Bankers Association of the Philippines Open Market Committee. He holds a master's degree in business administration from Rutgers, the State University of New Jersey, USA, and a Bachelor of Science degree in business administration from the University of the Philippines, Diliman. Ladies and gentlemen, let's all give a virtual round of applause to Mr. Raul Martin Pedro.
Thank you very much, Michelle. Good morning, everyone. Welcome to the Economic Forum, and allow me to talk about what's happening in the local market. I have a few points to tackle, and I hope it will drive in a few key points. What we have on screen is the balance sheet of the central bank. What I wanted to highlight here is that the central bank has launched a massive direct monetization and quantitative easing operation. What does that mean? They have significantly raised the amount of assets they have by way of this area here, which I boxed in red, by purchasing domestic securities from the open market. From what was previously running around 200 or so billion pesos each year since 2017 up until 2019, starting this year, especially with the pandemic, that domestic securities position of the central bank has grown to 1.2 trillion. That means they have pumped in extra 1 trillion to the market. They bought it from the open market. And as a result, what we've seen is that the total assets of the central bank has gone up up 31% to 6.76 trillion pesos. In the prior years, under normal conditions, if I can call it that way, the balance sheet of the central bank would grow anywhere from 2.4 to 5%. Growing 31% clearly shows that the central bank is doing everything that they can to support this economy. So on the next slide, what we're showing here is a graphical representation of the balance sheet size. This upward trajectory between on the last part really represents the sharp shift in the balance sheet size of the central bank. And just to do a recap of what they've done since the start of the pandemic, first, they have cut their policy rate by 200 basis points to 2%. And we are now at what we could call as negative real rates territory because the local inflation is at 2.5%. And many of you, I suppose, have noticed that your time deposit rates have gone down significantly, and it is mainly driven by these actions of the central bank. Second, they have cut reserve requirements for big banks up to 200 basis points, and for rural and thrift banks, they've cut it by 100 basis points. For us big banks, the reserve requirement is down to 12%. That means for every peso of deposit that we take, we can now lend up to 88 centavos of that out to the market, whereas before it was at 14%, or just lend out 86 centavos. The other part, or the other thing that they've done is that they've entered into a swap or a repo arrangement with the Bureau of Treasury of the Philippines, where in effect, the central bank is able to lend directly to the national government 300 billion pesos. So thereby easing the requirement of the Bureau of Treasury from directly tapping the market by that amount. Fourth, in as much as the peso has been appreciating significantly, as what our previous speaker has described, the central bank has actually purchased about $4.7 billion from the market. And this translated to extra pesos again in the system. And lastly, as I said, they've purchased peso bonds from the open market. And as a result, their total assets have grown 35%. So clearly, what we've seen is that the central bank is doing everything that they can to help the economy. What have those actions been able to do for us? Since a quantitative easing, what we've seen is that peso interest rates, the lines here on screen shows the 2-year, which is the green line, and the 10-year rate, which is the red line. From a peak of almost 5% in March, just imagine at the onset of the pandemic, there was a knee-jerk reaction where rates moved up for the 10-year, close to around 5%, while the 2-year rose around 4.5%. But since then, given all the central bank action, what we've seen is that rates have gone down significantly. The hope is, as the central bank pumps in a lot of cash into the system, interest rate will go down, and it will encourage economic activity as banks are expected to lend more. On the next slide, so the next question is, will interest rates move higher next year, given the economic outlook for next year? Let's take a look. First, we know that the national government needs to borrow more for the pandemic mitigation. Can the system absorb more borrowings? Just as a background, the government has announced that they will need to borrow 3 trillion pesos for 2021, of which almost 2.6 trillion will have to be taken from the local market. And if we look at what is maturing next year of around 1.2 trillion, you see that there is a net new supply or new borrowing of around 1.2 trillion pesos from the local market. So quite a significant amount. On top of that, what we expect is that they will need to borrow 400 or so billion pesos worth from the foreign market of around, or equivalent to around 8.25 billion US. So knowing what the government needs to do, the question is, can the system absorb it? And the answer is yes. The system can still absorb it. If you recall in the previous, the next question is, given the size of the borrowing, will they crowd out the private sector from all available funding sources? Will their borrowing costs move up? And will they continue purchasing dollars and peso bonds from the market and continue cutting reserve requirements? Let's just take a look. As mentioned earlier, the balance sheet has grown 35%, and all of that excess cash right now is back with the central bank. The last column here shows the reverse repurchase facility. Basically, this is the amount of cash that banks lend to the central bank on a reverse repurchase mode. That's 300 billion. And then on top of that, local banks lend another 419 billion of overnight cash to the central bank. And we also place up to 832 billion in term deposit facility window of the central bank. What does that mean? With all the cash that the central bank has pumped in, banks are actually sitting on a lot of excess cash. And as a result, we place them back with the central bank to the tune of 1.6 trillion. Just to give you some perspective, back in 2013, when most of the central banks around the world were still in quantitative easing, the amount of excess cash that the system had was around this much, 1.6 to 1.7 trillion pesos. When rates started moving up, beginning 2015 up until 2018, the amount of excess cash that sat with the central bank was only 300 billion pesos. So we have grown almost 6 times since then. That's the amount of excess cash in the system. So taking this amount and the amount that we know that the national government needs to borrow, we believe that there is a significant amount of cash in the system and the market can actually fund the national government. I mentioned that they will need to borrow 8.25 billion US dollars. How will that pan out, and whether how high would their rates be when they start borrowing? What we know from the previous presentation and even our own house view, that the Federal Reserve is expected to keep their policy rates on hold up until 2023 to 2024. But given the optimism towards the renewed economic growth in light of the possible vaccine heading into the economy second half of next year, plus the Joe Biden win, which is a more engaging US government with regard to trade, what we expect is that the yield curve will remain or will go steeper. What does that mean? With the Fed keeping the rates at 0 to 0.25% up until 2023, what we would be seeing is that the longer end or the longer term rates, the 10 and 30-year rates will start moving up by at least 25 to 30 basis points up until end of next year. As a result, many of us trade the local market, ROP bonds. So what we've seen is that given that outlook on long-term US rates, we see that ROP prices will remain stable. And with the recovering economy, we believe that the credit spreads will remain rather stable as well. So the next question is, if the vaccine becomes available in the second half of next year, will rates move up? Let's see first, how has the economy performed? Clearly, the third quarter GDP was at negative 11.5%. And the way we see it, heading into the fourth quarter, it will not be significant. It will be better, but not significantly better. If we look at the nominal levels, economic activity, we would be hovering around the 4.1 to 4.3 trillion in terms of GDP. On this middle chart, and I think many, even Undersecretary Carl Chua and recently former DG Gunigundo has spoken about this. There is data from Google and Apple about the mobility index here in the Philippines. And what we've seen is that mobility in our economy by way of our mobile phone movement, we are still about 40% off the pre-pandemic level of activity. So with that, we believe there's still a lot of catching up to do. As such, we believe that policy rates will be kept rather stable over the next couple of quarters, and economy will slowly recover, such that our forecasts for Philippine economic growth is that for full year 2020, we're still expecting a negative 9.9, but will improve significantly 2021 up until and beyond. But one thing to note, we will not be at pre-COVID levels, not until 2022. The level of value, if you will, in 2019 was 19.37 trillion as total GDP. We won't get there until middle or second half of 2022. So with that, what we see is that the central bank has done a lot of heavy lifting. Fiscal support is needed in order to spur further economic growth. And the BSP action has been forcing investments and encouraging borrowing on the back of having real negative rates when with inflation being higher than your savings rate. And the only near-term concern perhaps is the recent uptick in virus cases globally as we head into the holidays. And the hope is that as the vaccine gets distributed, there will be wider inoculation and perhaps herd immunity by late 2021 or early 2022. So what we could expect is that firmer market conditions will be present in the second half of 2021. We see that household consumption for 2021, represented by the aqua bars here, will further improve. Manufacturing projections are likewise expected to improve. Currently, if I'm not mistaken, we are at the 65 to 75% capacity. We would expect that to move up to around 80, 85 middle of next year. And that would bring to a larger trade deficit as we expect our imports to start picking up heading into late fourth quarter this year and early next year. With that, I end my presentation and thank you very much.
Thank you very much, Mr. Pedro, for that. Certainly some things to keep in mind when we chart our investment game plan for next year. Now, our final speaker is a government official and a distinguished member of the academe. She taught at the University of the Philippines, where she also became the department chair of the School of Economics. She also served as commissioner at the Philippine Competition Commission before running as a representative of the 2nd District of Marikina City. She has an extensive research portfolio in the fields of health economics, industrial organization, microeconomics, education, poverty, public policy, and regulation. In June, her stimulus bill titled Philippine Economic Recovery Act was passed in the House of Representatives. She obtained her Bachelor of Science, Master of Arts, and PhD in Economics from the University of the Philippines. She also spent a year at Brown University in Rhode Island as a postdoctoral fellow back in 2002 at the Population Studies and Training Center. Ladies and gentlemen, let's all welcome House Deputy Minority Leader and Representative of the 2nd District of Marikina City, the Honorable Stella Kimbo.
Thanks, Michelle, and good morning to everyone. First of all, thank you for inviting me. What I've done is to divide my talk into three parts. First, I'd like to talk about the COVID and the economic situation in the ASEAN. And then second, in the Philippine context, the need for economic stimulus and economic resilience. And then finally, some insights on healthcare market opportunities. So first of all, this is the COVID situation in the ASEAN. Of course, good news is that quite recently, we moved down to number 3 in terms of active cases per population. We were actually number 1 for a long time, for many months, until recently. Malaysia and Myanmar had overtaken us. Of course, this could be partly due to Malaysia doing aggressive testing with 782 tests per 10,000 population. For the Philippines, a cause for concern is that we have the highest deaths per population. And this could also be because we have the fewest number of hospital beds per population. In other words, our health sector capacity is quite weak. Now, looking at Vietnam's numbers, its active cases per population and deaths per population are low. And well, they're not exactly the lowest, but considering that Vietnam is more open in terms of trade and tourism compared to Cambodia and Laos PDR, we can consider Vietnam's COVID performance as noteworthy. So the next question to ask is, have our COVID numbers plateaued? This figure before you seems to suggest improvements. Our curve here is that blue-green or teal line, which Malaysia and Myanmar crossed sometime in October, while Indonesia crossed the Philippine line sometime in November. So we're improving in this sense, but we have to make sure that this is going to be a sustained improvement. And perhaps another caveat is that this blue-green line is really a function of testing as well as reporting. So if all those who need to be tested gets actually tested and the results are faithfully reported, then this is indeed a picture of hope. Now, our COVID performance seems to be related to overall government spending on health. With the exception of Malaysia, the worst COVID performers in the ASEAN, including Myanmar, Indonesia, and the Philippines, also have the lowest government spending on health as a percentage of GDP. Now, moving on to GDP figures, how has our economy been relative to our ASEAN neighbors? In terms of GDP growth, from being number 2 next to Vietnam before the pandemic, we are now the worst performer with GDP contraction of 16.9% in the second quarter and 11.5% in the third quarter. And the numbers beside those curves refer to ranking in terms of COVID deaths per population, going from lowest to highest. So as you can see, Vietnam is the best performer in terms of avoiding COVID deaths and also in terms of GDP growth. On the other hand, the Philippines, we are the worst performer in terms of COVID deaths and GDP growth. So roughly speaking, they're related. The countries that will have a better handle of the COVID situation would obviously recover and grow quicker. Now, when we think about the fourth quarter, it doesn't help that we've had a series of unfortunate events called Quinta, Rolly, Shawnee, and then Ulysses. And my city, Marikina, was actually very badly hit by Ulysses. I took this photo 3 days after the typhoon, and this was taken in our hardest hit barangay. And the NEDA estimates that total damages brought about by these typhoons would run to close to 100 billion pesos. So given all of these numbers, I believe that the time is ripe for a third economic stimulus package, or a Bayanihan 3. If you may recall, our economic managers, or the DBCC, they've predicted an overall GDP contraction of 5.5% for 2020. But as soon as the PSA announced the third quarter GDP numbers, it was clear to me and to many people that an overall 2020 GDP contraction of 5.5% is simply not going to be possible. For us to hit that target, that would mean that we need to grow 6.4% in the fourth quarter. So it is mathematically possible, but clearly statistically impossible. So from where I stand, the biggest problem is really that the 2021 General Appropriations Bill, or the national budget, assumes a contraction of only 5.5% and a total proposed amount of 4.5 trillion pesos. And that amount cannot be changed. That's according to a constitutional provision. That's according to Article 6, Section 5. So in short, the 2021 proposed budget, which supposedly is a COVID budget, presumably includes a response that is proportional to an expected contraction of only 5.5%. So if actual contraction exceeds 5.5%, then the required incremental response will not be found in the current proposed 4.5 trillion budget. So in other words, we would need an additional economic stimulus package. And for that reason, I filed a Bayanihan 3 bill, and that contains a COVID response for both health and the economy, a disaster response, and lastly, a set of measures that would ensure that we finally take the first steps towards building economic resilience. Now, some government officials, as soon as we filed Bayanihan 3, some officials said that that is premature. So that was how they described the Bayanihan 3 bill. And I suppose premature because the 2021 budget already provides economic stimulus. That's their thinking. Of course, I do agree that we must prioritize the passage of the budget. I mean, no one will disagree with that statement. But I keep my position that the proposed 2021 budget contains an insufficient COVID response. And this is understandable considering that the budget call typically happens in the first quarter of every year. And for this year, the deadline for government agencies to submit their budgets to DBM was June 1. And of course, at that time, government agencies would not have expected the COVID situation to be what it is today. And during the budget hearings in Congress, I repeatedly asked the question, okay, how much is the total COVID response that is lodged in the 2021 budget? And unfortunately, I did not get a categorical response during the hearings. But I gave a formal query to the DBM on this matter, and subsequently they replied to me in writing, and here's what they said. So the summary is in the slide before you. The total COVID response, according to the DBM, is 838.4 billion pesos. And there are three types of COVID responses. First would be a health response, amounting to 31.4 billion. Which is small. It's too small. First of all, health spending under Bayanihan 1 and Bayanihan 2, if you put those two figures together, that would be about 80 billion pesos. So clearly 31.4 for an entire year, 2021, is too small relative to what we are currently spending. And of course, our spending for 2021 must include a sufficient budget for the vaccine. The proposed amount actually for vaccines, which is part of this 31.4 billion, is only 2.5 billion pesos. And that's only enough to inoculate 3.9 million Filipinos. And again, 2.5 billion, that's far too small relative to the 70 billion pesos that IATF said in the news today, which what they think was going to be needed for an initial rollout of the vaccine program. What I also find interesting in DBM's response to my query is this 589.8 billion, which is the DPWH budget. My understanding is that this amount should not be considered as part of the COVID response because it had been pre-programmed even before the pandemic happened. In other words, 589.8 is already part of the Build program, which the current administration had already planned as early as 2016. So if you remove 589.8 from the 838 billion, we are left with only 248 billion as a COVID response. So again, a 248 billion peso response is way too small for a potential 3.4 trillion peso economic damage, right? So if we expect, if we are to believe Mr. Pedro's estimates of GDP contraction in 2020, which is about 10% contraction, and if we also include the 6% growth that we should have achieved if COVID did not happen, then that would be roughly about 3.3 trillion. And then if you throw in the additional 100 billion peso damage caused by the 4 typhoons, so we're looking at a total of 3.4 trillion peso loss. So 248 billion compared to that is really too small. And even if we include the 165 billion peso authorized spending under Bayanihan 2, so that would mean 413 billion, still too small relative to 3.4 trillion peso economic damage. So bottom line, we need a Bayanihan 3. So next, let me talk about resilience. The recent parade of typhoons, again, is a reminder that we need to aspire for genuine economic resilience. And simply put, resilience is just ability to cope and recover from shocks. So that's the simple and, in my mind, true meaning of resilience. I think resilience should not be equated to just being brave enough and to accept your fate. I think it has to be a more proactive concept than that. So we need to take steps to ensure that we can bounce back and recover from this pandemic and from future pandemics and disasters. So in the context of the current pandemic, it is quite clear that we lack resilience in healthcare. We don't have enough beds, for one. Second, our frontliners are not sufficiently cared for, some of them even dying before receiving their hazard pay. As we know, PhilHealth is not effective and not trustworthy. With the DOH, I think we have a problem with planning. We can't even properly plan for the COVID vaccine. We don't have sufficient cold storage facilities. We worry that the government agency tasked to procure will not be effective. Then we also have trouble with data management, particularly COVID data. No one fully believes the COVID data published by the government. And I guess the bottom line is that DOH lacks in-house technical capacity. So in a nutshell, that's the not so happy state of the health sector today in the context of the pandemic. Now, moving on to the economy as a whole, here are some issues with respect to economic resilience. First, there's a lack of social protection for workers. We don't have a national unemployment insurance program like Vietnam, Thailand, and Malaysia. There's also a lack of support for business innovation. To begin with, our business environment is not very competitive, and the cost of doing business is high. And on top of that, government support for MSMEs to pivot in the time of COVID is also quite limited. Moving on to the education sector, teachers and students are not equipped for online classes. In social media, there are countless stories about students not having gadgets or teachers and students not having adequate internet connection. There's also a lack of financial inclusion. 77% of Filipinos remain unbanked. So even if the government has increased funds in Land Bank, Development Bank of the Philippines, and Small Business Corporation for loans to MSMEs, an ADB study would show that only 4.4% of micro, 5.7% of small, and 16% of medium-sized firms were able to successfully get bank credit at the height of the lockdown. There's also poor digital connectivity. A World Bank study shows that our performance with respect to this is far below the ASEAN average. And finally, I'd like to point out we have inadequate protection against floods. So many have helped Marikina, thanks to all donors out there. But to be honest, we are quite tired of this cycle. You know, every time there's a heavy rainfall, people have to go up to their roofs to be safe. We wait for the water to subside, and then there's mud left all over. Many of the personal belongings are destroyed, and people have to restart their lives. And that happens every time we have heavy rainfall. Of course, we know that donor fatigue can also easily set in by now. So what we need really is a permanent solution. There is a master plan for flood control approved by NEDA and adopted by the government in 2012, but only 2 of 11 key infrastructure projects have been initiated. The dam that will protect Marikina and Pasig is still waiting final approval from the ICC. So in a nutshell, the health sector and the economy as a whole are not resilient. Our economic contraction will be worse than expected. So ergo, I think we need a Bayanihan 3 bill. And this is my version of the Bayanihan 3 bill. Some Kongs, I think a handful have filed their own version of Bayanihan 3, but this is my own version. It would have 3 elements. First is a COVID response, which would include additional funds for the vaccine program. It would include more of the usual stuff, so meaning ayuda for households as well as displaced workers. We also have support for teachers and students, particularly internet allowance, and subsidies for workers, including testing for workers, paid sick leaves, and overtime pay for workers who are employed by companies that end up having multiple shifts because of having to comply with IATF guidelines. So those are just examples of worker subsidies. Anyway, so the total for these items is 330 billion. Now, the second element would be a disaster response amounting to 70 billion pesos, including 20 billion in ayuda for households affected by recent typhoons and another 50 billion for rehabilitation. Finally, this last set of measures would be all relating to improving resilience. First, I think that we need finally a long-term economic plan. We actually don't have one. So this would be a step beyond NEDA's Ambition 2040, if you've heard about it. This was a large-scale study conducted by NEDA, I think, during Pinoy's time. And this really just determined the aspirations of the average Filipino family. But how to get there, we still don't have a plan institutionalized. So I think we should begin with that. For infrastructure, obviously infrastructure has very huge multiplier effects. So we need to invest in infrastructure. And I would like to make a pitch, not only for flood control, but also for housing. The pandemic taught us that because of inadequate housing, families are unable to do self-isolation. So that's the reason for why we had to put up a lot of these isolation facilities. And then the typhoons came. Typhoons also reminded us that housing is inadequate in providing protection to families. And if you think about the average housing space currently, the average housing space per capita for the poorest families is only the size of a billiard table. So if you have 5 in a family, the average housing space would be 5 billiard tables. So I think housing should also be a priority. I think monitoring is also important. Also need monitoring. Any economic stimulus package would involve huge amounts of resources. So we need to ensure that disbursements are not only timely, but also proper and honest. And last September 15, if you recall, Bayanihan 2 became a law. So this is our second stimulus package and authorizes a total spending of 165 billion pesos, of which 40.5 billion is allotted to health. So that would include frontliners, PPEs, isolation centers, as well as contact tracers. And Bayanihan 2 also creates market opportunities in the supply of medical goods as the law eased a lot of procurement rules. There's also language in the law that gives preference to local manufacturers of medical goods. And while incentives for imported medical goods have been granted by this law, the intent is really to supplement domestic supply in case local supply is not sufficient. So there is a proviso in the law for the exemption from import duties, taxes, and other fees, but the DTI must certify, of course, that the goods are not locally available or would be insufficient in supply. So in short, there's preference for local manufacturers, but in case supply is lacking, then incentives for imports would kick in. And then moving forward, what private healthcare providers must watch out for are reforms in PhilHealth, which is the largest third-party payer for hospital care. After a series of hearings in Congress, what was clear to us is that PhilHealth has not been able to control fraud. They were unable to manage their funds properly, and the technical leadership is poor. So reforms should be forthcoming, and particularly in how they pay healthcare providers. And one recommendation by Congress is to review the case rates. These are the fees that are specified for every type of illness, and there are like 3,000 plus of them. They will surely review those 3,000 plus case rates, and I think investors should watch out for those, as of course this will impact investment decisions in the private hospital market. So finally, I think I've given you enough of bad news. I'd like to end on a high note. There have been encouraging results from clinical trials on the COVID-19 vaccine. So we are now seeing light at the end of the tunnel. But of course, we must be able to build that tunnel. We must be vaccine ready, which means government must set aside a sufficient amount of resources and must figure out the logistical requirements to roll out an immunization program. Government must be able to provide the vaccine for free to poor families. In the proposed 2021 budget, again, I mentioned this earlier, DOH included a measly 2.5 billion. What Congress has been able to do upon final reading was to add another 5.5 billion. So now it's 8 billion pesos. Right now, the Senate is deliberating the budget, and hopefully they are also able to increase that budget. But nonetheless, again, if there's still a budgetary shortfall, then Bayanihan 3 should be able to address that. In addition, we need to make sure that the procurement laws would allow government to make advance payments for the vaccine. Because of course, all countries would line up, and of course, we have to make sure that we're able to make proper advance payments. Finally, government must be able to provide for all logistical requirements, including storage and transportation facilities. So clearly, that all of those requirements are not available within the public sector, so private sector will definitely play a large role here. So that's where I am, Michelle.
Thank you for that very insightful presentation, Congresswoman Kimbo. You sounded like a doctor, I have to say, but the prognosis isn't looking too good. But you know what? That's okay. That's okay, because that's the reality. In the open forum, we're going to talk about the path forward. So I think we're now ready to move to the open forum. We're going to try to take as many questions as we can from the audience members. Please don't forget to join the conversation. For participants. Do type in your questions in the Q&A function of the webinar. We'll try to get to them, as many as we can, for this morning. So, okay, joining us again for the open forum are Honorable Stella Kimbo and of course, Mr. Raul Pedro. They will be taking the questions live. As for Ms. Leong, we actually sent her a set of questions and we're going to share her answers with you right now. Let's watch this.
That's a good question. I think short term, of course, the promise of vaccines are positive for Southeast Asian economies. But as I mentioned before, the distribution of vaccines take time, and developed economies will be the first to get orders of the vaccines. At the same time, we have weather changes now that seem to be bringing increased case numbers in some Asian countries. Year on year, economics numbers will look better for all the countries given the very low base of 2020, but sequential and momentum economic numbers will still be vulnerable to how fast the vaccines can be distributed to different countries and to the vulnerable segments of society. I think Asia is still the region at the forefront of the global economy, notwithstanding COVID-19 and even the US-China trade war. Asia has outperformed all regions in COVID-19 containment on the whole, notwithstanding increased case numbers in some countries. If anything, the US-China trade war and COVID-19 have opened up the possibility of new and shortened supply chains and the necessity to undertake digital reforms.
Thank you so much for your insights, Ms. Leong, again. Okay, so let's now move on to our live open forum. I wanted to start with Congresswoman Kimbo, coming from the answer of Ms. Leong. Clearly, even before the pandemic, the center of gravity, economic gravity, has been shifting from the west to the east. And even with the pandemic, Asia will still emerge as one of the biggest, if not the biggest economic bloc in the world. In fact, there was an estimate by Bloomberg that says by 2050, already considering the pandemic impact, by 2050, 3 of the world's biggest economies are going to be Asian emerging economies: China, India, and Indonesia. Philippines is part of Asia. Congresswoman, do you think we're going to be a laggard in that group when you look at that group? I mean, when you showed us the numbers earlier, the numbers are looking pretty bad in comparison to our peers. Are we ready to take the back seat now? We used to be the darling economy.
I really think it depends on what we do in the short run. So the numbers, the bad numbers that I just shared with you, they're all about today, right? But then again, all is not lost. There are still opportunities to correct the situation. And so I'm saying I really do hope that the economic managers are more open this time to spending more. I think it has become quite clear today that there is a bigger need to spend. Maybe we were a bit gun shy in the earlier months, and understandably so, because there was a lot of uncertainty then. But now, again, we're seeing the light at the end of the tunnel with news of the vaccine. So I think there is scope for being more aggressive in spending, and if we are able to spend enough, I think we can. There's a greater chance that we can go back to our previous trajectory of growth.
Mm-hmm. The economic managers have always said they're trying to stay conservative because they want to save their ammunition. They don't want to run out of ammunition before the war is over. It's not a sprint, it's a marathon. But as you mentioned, we are finally seeing the light at the end of the tunnel. So more or less we can estimate. Speaking of the spending, the aggressive spending, this Bayanihan 3 proposal, what are the chances, Congresswoman, that these fiscal stimulus measures will be hijacked or sidetracked by politics? I mean, elections 2022 is just around the corner. And if you talk to political reporters, they'll tell you 1 year before the elections, we're not really expecting much work done in the lower house or in the upper house anymore.
Well, in terms of like effort to get a bill passed, I think congressmen and senators would be more than willing to put in the required effort. As you know, if you recall, when we passed Bayanihan 1, everybody stayed up until about 3 a.m. So we were there for like hours and hours until the bill was finally passed. So I think in terms of willingness and the effort required, I think there's no problem with that. I think the problem really is with the executive, right? As you know, for a bill to become a law, there has to be some willingness also on the part of the executive, because we of course expect the executive to implement laws passed, right? Otherwise, it's going to be an unfunded law, so it's a useless law. So as soon as we're able to convince the executive that this is the right way to go, that's going to be easy to pass into a law. I mean, so it's really, I think, the hurdle here really is convincing our economic managers that this is the right way to go.
I mean, we're all experiencing the pandemic, Congresswoman. Why do you think they need so much convincing for this? What seems to be stopping everyone? What's holding everyone back?
I don't know. You know, I can only surmise. I mean, because looking at the reports of the Treasury, the cash is available. We've taken out a sufficient amount of loans, as explained by Mr. Pedro. So the cash is there. We've taken enough loans. We're seeing the light at the end of the tunnel. I don't know. The only other factors that I can think of that can be making them a little bit more conservative is perhaps number one, the absorptive capacity of agencies. So meaning if you download a huge amount of funds, a particular agency, are they able to spend that quick enough? And of course, for a stimulus package to be effective, it has to be spent quickly. So maybe it's that, but then that can be corrected. They can choose an implementing agency that meets their standards of performance, right? And there are some of them, right? And number two, maybe they're worried about leakages. I mean, maybe corruption in government, maybe that's also an issue. So, but again, which is why in Bayanihan 3, I put in a provision for monitoring. So we have to make sure that there is a monitoring system in place. There is transparency. I think transparency, that's a big that's a big mechanism against potential leakages.
And you mentioned absorptive capacity. This proposal for Bayanihan 3 is being pushed, despite the fact that Bayanihan 1 and 2, the funds have not been fully disbursed yet. I guess I wanted to do a follow-up here, Congresswoman. What is your base case and best case scenario for how soon we can get out of this rut? Are you looking at a time period? What sort of timetable are you looking at, realistically speaking?
Honestly, I think it really depends on the vaccine. So if the vaccine will come soon and we throw in an additional 6 months for the vaccine to be to arrive in the Philippines, in other words, we need to procure and then be rolled out. So we're looking at maybe 1 year. That's the best case for me.
Okay.
So by the end of 2021, we should begin to pick up.
I'm not even going to ask you the worst case. I think the numbers are not going to be good.
Yes, don't ask me the worst case.
Okay. So I want to go now to Raul, to Mr. Pedro. Talk to us about financial firepower. I mean, the banks have had to deal, with unprecedented monetary policy cuts from the central bank, demand destruction on one end, and rising default risks. How do you think, honestly, are Philippine banks coping as a frontliner as well in economic recovery?
Well, right from the very start, or even before the pandemic occurred, the Philippine Central Bank has already imposed certain regulations that mandated us to have a very strong capital position. And to that, we credit the central bank. And when this pandemic came in, all the Philippine banks were pretty much well prepared for events like this. And clearly, with the additional support the central bank has provided in terms of liquidity, we are able to face the unfolding economic difficulty at this point. We do realize that a number of our citizens and businesses have been affected by the pandemic, and to a certain extent, SME and certain businesses have suffered, and to a certain extent, some Philippine banks have begun to absorb that as well. But despite that, given the very strong capital position of banks, we are pretty much in a very strong position to support the economic recovery as it comes.
Raul, I wanted to share this quote from JP Morgan's Jamie Dimon, who 4 months ago talked about the global recession. And I wanted to share this. He said, quote, "This isn't a normal recession. The recessionary part of this, we're going to see eventually, but we won't see them right away because of all the stimulus. We haven't seen any of the recession yet." That's what he says. Would you agree that, all the monetary injections, these stimulus packages are distorting the true condition, perhaps, of the industry as well? And how will we know if the worst is over for the banking industry?
Well, it's a bit different with the U.S. As their stimulus program have actually reached the businesses, and as Congressman Kimbo has described, it appears that the fiscal side has to do more. Right now, and as I have described, the heavy lifting has been on the central bank side. The monetary stimulus is there. We are all pumped up, if you will. We have the excess cash. So going back to the recession, in a way, the numbers that we are seeing of a large drop in Q2 GDP, which continued on to Q3, clearly we're seeing it. Unlike the US, you saw a 33% drop in GDP in the second quarter. They took it back in the third. Us, we're still there. So in effect, the quote of Jamie Dimon is not applicable to us because we are feeling it at this point.
Mm-hmm. Is the worst over?
Is the worst over? I think we've seen it, but the recovery, as Congressman Kimbo has described, needs a lot of more push for us to clearly see it way behind us.
Okay, so from one frontliner, the banking sector, to the other frontliners in the healthcare sector, Congresswoman, we're all trying to make sense of what's happening today. Where are we headed? What sort of policy we can expect over the next 2 years? I imagine it's going to be a make or break recovery period for the Philippine economy. Aside from the bills that you've authored and lobbied for, are there other measures still related to COVID recovery plans, but that cater specifically to the health sector that we're pushing for? I mean, they take care of us, we have to take care of them.
Yeah, so there's a Health Security Act, which creates a National Action Plan for Health Security and a Philippine National Health Security Council. So this is some kind of an IATF that's attached to the DOH. So in other words, it's institutionalizing that kind of decision-making process in times of pandemics. So I think that's a good step, because right now, remember, we had to just all of a sudden create the IATF when the pandemic happened. At least now there's something that's going to be more or less permanent. So that's the one that's being deliberated by the Committee on Health. But there's a bunch of other bills that had been filed. So there's one that establishes a free COVID vaccination program. It was filed by Congressman Olivares of Parañaque. And there's one by Congresswoman Precious Castelo. It's a bill providing for cold storage facilities for COVID vaccines. So those are some. I also filed a Social Health Insurance Crisis Act. So this pertains to the necessary and urgent reforms for the PhilHealth, because as you know, many things happened to PhilHealth in the recent weeks. So a social health insurance program is very, very important because it protects households from financial risks, right? Remember, every time you get hospitalized, that can push a family into poverty. So that's the importance really of an effective PhilHealth program.
Congresswoman, I'm just gonna, ask the question that's probably on everyone's minds, but nobody wants to ask. The elephant in the room, rather, DOH. There seems to be a struggle among the public to trust the health department's capability and transparency. And this is the worst time to have trust issues with the health department when we're in the middle of a deadly pandemic. How do you imagine we can address it? Is there a band-aid solution in the meantime? While we're here, what can we do to, get the DOH up and running like a well-oiled machine, a more efficient DOH working for the country?
I think what is really needed is capacity building. So, and particularly in data collection and data analysis. So right now, what's happening in the DOH is because they don't have that in-house capacity, they have to rely on experts. But so it's not so bad if what the experts tell them are all consistent. So if you talk to, let's say, 3 groups of experts and they have consistent recommendations, that's fine, right? But in a situation where you have 2 groups of experts and they give you conflicting recommendations, what will the DOH do if they don't have the in-house capacity to vet all of those opinions? Like, case in point, remember for transportation, there was a recommendation to reduce the social distancing protocol from 1 meter to 0.75. But there were two groups of doctors recommending to the DOH. One group said, don't reduce. One group said it's okay to reduce. But both groups of doctors are actually well known in the field, right? So which do you choose, right? So there's really a need to develop that in-house technical capacity. So that I think is a longer run solution. And I actually filed a bill for that. I filed a bill creating a health economics unit within the DOH. So right now they don't have a chief health economist, which I think they really do need. Okay, so that's the long-term one. Short-term solution, they gotta control the COVID situation, right? I mean, meaning, so if the COVID curve seems to be plateauing now, they've got to make sure that that is sustained. So I think if they're able to do that in the next couple of weeks, I think it's going to be easier for us to trust DOH more.
But in the next couple of weeks will be Christmas, and we know how Filipinos celebrate Christmas. We tend to gather. So hopefully
in
people...
other words, they have to be proactive, meaning they expect behavior to be this way. So ngayon pa lang, you have to make sure that you communicate effectively to the public what is necessary. Because of the typhoon, as I would go around the district, I noticed that many people don't have masks. So it's as simple as that, right? One reason for why Vietnam was very successful was that they had a very good public health communication strategy. I think this is something that we can do as a sort of band-aid solution, not quite band-aid, but something that you can do in the short run.
And speaking of hospitals and healthcare, how long, Congresswoman, do you think it will take to normalize, the entry of non-COVID-19 patients back into hospitals? Because a lot of people are scared to go to the hospitals with the fear that they will contract it there. They'll get it there.
It's difficult to give you a date, but I can give you maybe 3 things that are needed for that to happen. Well, first, again, we have to make sure that we're able to control that COVID situation. That's a first. Try to keep that line plateauing some more, right? Number 2 is, and that is related to confidence, right? As soon as people understand or realize that it is somehow plateauing, then that's going to build confidence. Because right now, the problem really is the fear factor, and that's everywhere. Confidence is very low because people are afraid, right? So as soon as people see that the curve is somehow improving, then that will certainly build confidence levels. But number 2, if you have hospitals being more proactive in ensuring that health standards are in place, then again, people will see that, okay, it's not so bad, because if you go to the hospital, you have to do this. They're quite strict. There's a QR code. There are transparent separators when needed. Everyone's in PPE. So I think there's certain things that hospitals can do to actually build that confidence as well. And then maybe lastly, if we are able to reduce infections among frontliners, right? If there are no more stories about frontliners getting sick or dying, I think that's also going to make people more confident to seek care when needed.
Okay, let's build confidence, but not complacency. There's a difference, so we have to remember the difference. Okay,
exactly.
I want to go now to Raul, to Mr. Pedro, about banking, consumer banking. How has your view towards consumer and SME lending changed, if at all, during this pandemic? Were there any changes in risk assessments for any particular sector? And how has it affected your lending?
Well, thanks for that question. Clearly, a good part of our economy has been affected. So in a sense, it has changed our approach to it. Clearly, there are stricter standards, and trying to stay away or trying to reduce exposure to those highly affected industries. And you've seen this. I don't want to name a particular sector, but it's quite obvious that the travel, tourism, so on and so forth have been affected, and a little more. So in a sense, in a way, we became a little stricter on our standards, but nonetheless, as a bank, our mentality to it has not changed. SME and consumer sector has been growing for us quite significantly over the past couple of years. And once the economy normalizes, I'm quite certain it is an area that we would want to be heavily involved with again.
Just for context, lending growth in the Philippines has slowed to its weakest in 13 years. So definitely the hesitation, we can sense the hesitation there. Raul, I wanted to ask, what has been the impact of the Bayanihan 2 package, for example, on the banking industry in terms of asset quality? I remember Fitch Ratings just came out this week with a report that said, risks of asset quality deterioration and significant credit stress are likely to persist among low until at least the first half of next year.
Well, Bayanihan 2 per se doesn't really have any additional impact because the payment extension that is being granted under that act is only applied to clients who are current in their loans. So therefore, it has not really changed the equation for the banks with respect to Bayanihan 2.
Okay, and of course, how can we not ask this? The peso dollar outlook, the peso has been comfortably perched on the 48 to the dollar handle from 50.52 at the start of this year. I sense a little defensiveness in the currency. Do you think it's starting to be overvalued, if at all?
Well, a bit. Actually, you have to credit central bank. We believe that they are in the market, trying to keep the exchange rate rather stable. We do expect with some additional economic activity pickup, especially in this fourth and first, in anticipation of pickup in the next year, we do see the dollar peso move up a bit again, nearing the 49 level by year end. I know our colleagues from MUFG, she presented a 48.50. Our numbers are at around 49, but the general direction is the same. We expect a weaker peso as the global economy recovers, and hopefully we get pulled along.
Okay, and I guess I want to ask this, does a strong peso necessarily reflect a strong underlying economy, the fundamentals?
No, not really. It's a double-edged sword, actually. It's a double-edged sword. Especially for us, a growing economy, what you'd want to see is that, what you would expect is that we would be importing a lot for infrastructure, for domestic consumption, for capex. Clearly, that's what we need. And a result of that importation should be a weaker currency. And so in that sense, a strong peso doesn't seem to point that we are really in a very strong position.
Okay. I think we've come to the end of the open forum, but I wanted to leave you guys with one question each, answerable by one word. 2020 has been, a crazy year for many of us. What is your hope? What is that one word hope that you have for 2021? Next year we could be having this conversation again. What is that one word that you hope will describe 2021, the Philippine economy in 2021? I guess I'll start, ladies first. Congresswoman Kimbo, one word.
Resilience.
Resilience. Raul?
Recovery.
Okay, we're going to expect that from this economy, resilience and recovery. Thank you very much, Honorable Kimbo, and of course, Mr. Pedro, for joining us this morning, as well as to all of those who joined us, and of course to Ms. Leon for sending in her presentation. We're extremely honored and grateful for the expert insights that you've shared with us. I'm sure our audience will be walking away from this exclusive session with so many takeaways and lots of things to think about after this discussion. Now, for those who are still counting, we are 257 days into quarantine today. Can you believe that? 257 days. Truly, this year, one for the books. But there is hope, because it seems science and our governments are pushing back. We're finally seeing that light at the end of the tunnel, how long that tunnel is, how we get from where we are to that light at the end of the tunnel. Let's not forget, it's still on you and it's still on me. And that concludes the Security Bank Economic Forum 2020, a look into the economy and the future of the Philippine healthcare industry. On behalf of Security Bank, we would like to thank all of you for joining us today. It's been a pleasure to connect with you all. Thank you and keep safe always.